Welcome to episode 1 of the Money Mixtape, a podcast for market landscape. Every Sunday, I get together with my friends Trader Nate and Sean Clark on Twitter Space, and we go over the market conditions, review stock charts, options data, and market news to prepare ourselves for the coming week. Today's episode, we cover the upcoming earnings for the week of March 27th, some stock chart reviews like SPY, QQQ, Tesla, NVDA, NEO, PLTR, just to name a few. Check out what we have to say about the action ahead and have a great week of trading. Tune in every Sunday to hear this live. All links will be in the description.
I'm somewhere, for sure. Welcome everybody joining. We got Kaye on the mic here as well. Get right into these charts. Hope you had a good weekend, Sean. It's been pretty lively over here. I've been having a lot of fun.
Yeah, it seems that. You've been doing really good, I think. So lots of great content coming up. We've had the clocks go forward today, so I'm a bit out of sorts. It seems to be very, very bright at this hour, which is good. It means it's halfway to summer. So, really good.
I do not want it to be summer because it gets roasting here. But, the life of living in the desert. Hey, Kaye, got you on the mic there. How you doing, sir?
Hey, Nate. Hey, Sean. Doing great. Good afternoon. Good morning.
Great to have you back this week. How were the croissants?
Oh, man, I'm sick of eating croissants.
That's so funny.
No.
If you guys didn't know, last week Kaye was at a contest, right? Like a baking contest?
Yeah, so it was in New York. This was it was a French contest. So all the restaurants or all the bakers who, bake French croissants, they had this competition and it was a final. So one of our local baker was actually participating there. So we went to support him. And it was like a 90-minute, you can eat as many croissants as possible, taste everybody's croissant. I got so sick of eating croissants. I was like, man, I have had almost 2 years worth of croissant in one day.
That sounds great to me. I don't know. What do you think, Sean?
I like croissants, but not that much.
That's too funny. Well, let's get into the fun stuff, all the data and the charts, and see what we got for next week. I'm starting to add things to the nest, but I'll keep doing that here in a minute. Just to run through last week's performance, S&P was up 1.39%. The Dow was also up 1.18, and Nasdaq up 1.66. So, despite all the market volatility and the banks and the news around bank runs and all of that, positive news across the board there. That's got S&P positive 3.42% for the year. Nasdaq's up almost 13%, just shy of 13% on the year, which is showing you tech's leading the way, right? And then, of course, our favorite Bitcoin. I shouldn't say favorite. I just like talking about in these numbers every week, and then we move on to the charts. But up 2% over the last 5 days as of this morning, but it was up 67. It's up 67% for the year. It got to positive 70% as it touched 28K. So for you Bitcoin enthusiasts out there, a really strong start to the year and a strong week. And I think the volatility in the bank news is helping inflows over to the Bitcoin side of the house.
Just to add to what Nate you mentioned, last week 9 out of 11 sectors in the S&P 500 were in green, and Netflix, one of those stocks which we haven't heard in a while, was almost up 8.2% in the week. So
yeah, how much was it up?
8.2% weekly gain. Netflix.
Dang, that's huge in 1 week.
Wow.
I did not even catch that. No, thanks. Was there any? I don't remember seeing big earnings coming this week. Do you have big earnings to talk about at all? Okay.
There are 3 earnings that might be of your interest. One is, of course, Micron, so MU, ticker symbol. Then you have Jeffries, and then the last one we have is Lululemon. There are a couple of retail favorites like Skills that I don't personally follow, and I think there's a Planet 13. That's pretty much it. Most of them are smaller companies, smaller market caps, a couple of Chinese companies as well.
I think the Planet 13 is a cannabis stock. Is that right?
Yeah, exactly.
Yeah, right on. Let's see here. Getting these things added to the space. You guys are gonna have to give me a minute. But I'm trying to think, and I'll be honest, I was on this morning. It was a great conversation, by the way, if anybody missed it. Was interested in dividend investing. Great conversation with at Smart Net Worth 1 and at the Dividend Dog. Nick and Dog were great. And so I've been busy with that all this morning, which is awesome. And I'll be adding that to the Substack as well. But, yeah, I can't, because of all of that, I can't remember last week. What were the big, were there big earnings last week as well? Or I don't recall anything. Oh, you know, it was Arista, right? Ain't it? Sorry, go ahead, Sean.
Nike as well.
Oh, that's right. Yeah, they had strong earnings. They had good earnings, right? Nike came through good earnings.
Yeah, I think the forecast wasn't great, judging by their stock price falling afterwards. But the actual earnings were pretty good, apparently.
It's all about guidance these days, like 100%.
Absolutely. Yeah, I think another one to note this week, so if I just butt in here, is that on Thursday we got IZEA Worldwide, which is actually one I used to invest in a little while ago. It's one of those kind of smaller companies, social media, kind of marketing, influencing kind of companies. So I'd be slightly interested to see what they do there, even though I'm not invested in them, but still it'd be nice to kind of see what they do.
Which one was that?
Thursday after close. IZEA Worldwide.
IZEA Worldwide. I'll have to check that out.
Ticker symbol IZEA.
Thanks, Sean. All right. So let's see here. I think I've got. Oh, tell me that your charts got up in there. I see QQQ. Do I see your SPY chart? There it is. Yes, got them all in there. All right. I think we can get rolling. Let's get into these charts. I've been looking forward to see what we got. I've got in here a couple of weekly charts as well as daily charts. So I think first up, though, as always, we'll start with SPY, looking at the Spider Index for the S&P 500. And let's look at your chart first, Sean. What do you got?
Daily, and I've got a new addition this week, and I've added the 20-day moving average. A bit of inspiration from you actually having 3 different moving averages, just to kind of get the general move within the stock. At least, obviously, in my opinion. So we've got all the moving averages kind of conversing into kind of similar sort of range, really. So 392 up to kind of 400. So these days we consider that a small range. I don't know if you'd agree, but the volatility in the market, I think that's certainly true. But I've drawn a little wedge kind of trend line coming down from, where is that, about 420 level back in February, kind of down to the 395 where we are now. And obviously the bullish momentum would be to push through that trend line and hopefully set a new trend, or just even make a move back up to the 416 level. In the short term, obviously the macro will depend on that as well. But another little thing I want to point out on this chart is the 389 level, which I've got the black line across there. That's just a good buying thing. So we saw that on Friday, where lots of volume came in. We had a nice steady move up for about 6 hours of that day, I believe. And yeah, you can see it back as well, mid-January, and also back in November last year. Just good buying volume at that level. So yeah, it's something to look forward to for the future of SPY, at least in the short term. I don't know what your guys' thoughts on this one.
That volume, that big increase in volume is definitely notable. I like that you highlight that.
Oh yeah, I forgot to even talk about that. Yes.
Yeah, you mentioned some support with volume there. I thought I heard you say, and that's what drew my eyes down there. But yeah, I mean that's solid to see, that you always want to see at support levels. And then I'm flattered, by the way, that you've included the 20-day instead of a little bit of inspiration. That's fantastic, because I love the 20-day. Not when it's not being obeyed, but when it starts being paid attention to and obeyed. It's a great resistance measure for the short term. So that's awesome to see.
Yeah,
What's that?
I see that throughout the space as well. In previous spaces that you've shown the 20, it does kind of move around that area. And I think it's important to note that for the watchers, listeners, whatever. Yeah,
it's a great guide, right? It's a great guide. I'm the chart that I posted, and it ties into what you're seeing, but it's I don't know. I feel like I'm a little bit less certain. I've got actually 2 here for SPY. The daily first on the left, and I noted this earlier in the week that we're pinched again right between the 50 and 100 day. And I'm wondering what we're going to see. Are we going to see a break higher or lower? And the reason I added the weekly is because it kind of gives a little bit of perspective that we're in this big wedge that's been forming over the past year, or really going on 2 years now. And which way we break, I think, is going to be meaningful. You might get a head fake and pull back in. I mean, obviously the wedge is a guide, and it helps with probabilities. And when we do break it, the idea is that the momentum, we've broke either that demand support or we broke through that overhead supply, and then you should get a decent move, because this is a consolidation kind of pattern, right? So I don't know which way it's going to break. I don't have any idea, but the fact that we're pinched on the daily and this wedge is tightening up, I could see it moving sideways for a few more weeks, honestly, or even. I mean, I'm of the mindset that this year is largely going to continue to move sideways and test recent highs and test recent lows.
Yeah, no, I agree completely. I think we could actually, moving averages don't have to be broken, trend lines don't have to be broken. We could just continuously consolidate for a number of weeks, months, even years in some cases. But it's something to look forward to, I think, just to kind of make aware. It's a day trader's dream, really, trading between a range. But yeah,
right.
So it can be a bit difficult.
Yeah, if you can capture that range and trade it aggressively and correctly, that can make a lot of money, no doubt. I've been talking a lot about collecting yield. Over here we're selling calls, but also just using dividend dividend yield to help with the sideways market, because you can have them reinvest and buy more shares as we're in this range. And then, once things take off, you've accumulated quite a bit of shares. So that's something else I've been thinking about, and adding 2 positions for what that's worth.
And SPY does give you a dividend yield, right?
Yes, it does. Different than SPX, right? So, yeah, it's a good call, Kaye.
So, interestingly, on the call and the put side, the couple things that really popped out for me was that last week we were in an extreme fear. However, that has changed to fear now, so which means that the put to call ratio has improved, right? It's 0.97 put to call ratio, which means that there are more calls versus puts. And if you look at these very near at the money strike prices, you have about 47,000 at 400 and 57,000 at 390. So it's in that range. But if we go back 2 weeks ago, and I have that data with me right in front of me. So when the options were expiring on 317, and you just look at the put options at that point of time, you were having open interest at 100,000 plus contracts. At 385, 101,000, 125,000 open interest at 380. So there was a lot more bearish momentum 2 weeks ago. I think with the latest rate hike and the bailout of these smaller banks, I think that has changed the momentum, at least from it's not as bearish, I would say.
Right.
But
I would
would
agree.
Still be careful. And Nate, as you said correctly, and I think it's very hard to pinpoint the trend here. It's probably going to be a sideways. You may get one day high, one day low. It's very difficult to. I think for traders, I think this is a good market because you just have to trade, right? You're not investing. But if you're an investor, you have to take a long-term approach over here.
Yeah, you have to stick to your discipline. This is where it can really test your patience, right?
Yep.
It's really nice to see a couple % gains every, couple of months. But if you just see it up and down, it's tempted to start moving money around and doing things you otherwise wouldn't or shouldn't do. So yeah, for me, when I get in these sideways markets, my whole mindset is just keep accumulating and identify this big consolidation range and remember what's happened in the past when we've broken out of these consolidation periods. And so, yeah, it is harder to stay focused, though. 100% agree there. So looking for some positive signs on the market here. I've been trying to see what our leaders are, right? And in the past few weeks, we've talked about SMH, the semiconductors, and I've also talked about biotech. And one's doing well and one's not. So I wanted to take a look at those this week. SMH, the ticker for the VanEck semiconductor ETF. It's got, top holdings, NVDA, AMD, and then numerous other chip stocks. And we're right at this key level of what I've noted here, 246.30 roughly. So call it 246. And it was this nice upward move momentum that we've got. You'll see it in the chart of NVDA that we've got later. And interesting to hear your thoughts on that, Kaye. But this nice rounding bottom and pushing up to the upside. I'm expecting us, if we get a little bit of a pullback this week, that I wouldn't be surprised. That's what I'm trying to indicate with that red dotted line pulling back, and then a bounce off that support, which is where that 20 days coming in and the 50 days coming in as well. And if we don't hold there, I think it breaks and drops down to the 150 day or right at the same support level at 216.50, which has been support before. So those are the levels I'm looking for. If we do get that bounce, I want to see it run right up to 270 and take some profits there if you do get that run, because I would expect again to see it check back to that 20-day moving average, which it seems to want to hold here recently. What do you see here, Sean? Anything you'd add?
Nothing. I think you covered most of it there. I think putting back down to the 246 level would be nice. Obviously, you've got the arrows pointing back last year at a time, so it has hit there, which means the more times it hits that area, the more solid, kind of generally. So bouncing off of that and moving to 270, and if we get a bit of momentum, good news, etc., good market, maybe 288. There's nothing stopping it really. NVDA seems to be an absolute tear. Again, we'll talk a bit about that later on. But I think it's moving in the right direction. It's got good volume from what I can see. It's not so much increasing, but it's steady. Some days are better than others, of course. But I think following this 20 and 50 is key, and I think we can move back up to 270 without really many problems, I think. Wishful thinking maybe, but this is just what I'm seeing on the chart.
Yeah. By the way, what do you guys think of my new charts? I've changed the colors because I was struggling. And
I love them.
They look good, yeah.
Thanks. I was fishing for compliments there. Thanks. Yes.
Normally people change the red color instead of the green color to make it more psychologically acceptable. But you changed the green. What was the thinking behind that?
Wait, I changed which to green?
You changed green to white.
Oh, green to white. Yes. Okay. Sorry. So because I'm colorblind and I have so that's why I had to ask a funny question like that, Sean. So I have a hard, no, it's great. I love talking about it. So I have a hard time deciphering between green and red. And I came across actually some charts on Twitter. I saw somebody posting and they were in this red and white with a black background. I said, oh my God, I can really see this so much better. Why am I not doing this? So I went with the white for the green candle and held the red because I can tell the difference between white and red. So there's no confusion. Where red and green, I had to find like just the right hues and whatnot, so that they wouldn't look too much the same. And so, that's why I did this totally selfish move here. But,
That's pretty common within colorblindness, red and green, isn't it? I had a friend a few years ago that was red and green, difficult as well.
Yeah, I've got both the red and green and the blue purple. So I've got all the struggles in the colorblind world. It's great. I mean, I can see color, which is fortunate. Like my grandfather, my mother's father, could only see black and white grays. Well, grays, I should say, is my understanding. And so, a little bit more difficult to read charts in that world. But, so anyways, I had to fish for some compliments because I'm enjoying these charts thoroughly. So, but we'll keep it moving. I mentioned that XBI was another one that I was hoping would be a leading indicator, a sector that would push us to new levels. And you can see that rounding started to take place. So what I've got here on this daily chart is, or what I'm seeing, I should say, is that square that's or the rectangle that's highlighted was that consolidation period. And then you see this move higher, which was great, forming that nice rounding pattern. And instead of a quick check back maybe to like the 85 level and moving back up, given that cup and handle formation people talk about, and it just kept going. I mean, this steep decline here all the way back below 80 with no signs of slowing down was really discouraging. I thought we would get some support around 80 and we didn't see anything near that. And it just continues to sell off. So it looks like we're heading back to 67 unless we get some real support here this week and hold the levels it's at. But yeah, I just want to highlight this because it unfortunately is not going the way we wanted it to go. And you got to highlight both of those things, right? SMH is doing what we thought. XBI is not.
Just to add on to this, do you reckon that's because maybe people drop the biotech stocks first rather than others if they see like a potential panic within the markets, like we've seen with the financial sector recently?
Yeah,
they might drop these stocks before other stocks.
I think they're more speculative, yeah, so that would make sense. And then you've got the semiconductors being a part of like the new infrastructure bills in the States. And so that's part of, I think chips are looked at as more fundamental to a lot of different areas of the economy. So I think maybe that's helping them as well. But yeah, I think you're right. XBI is more speculative. And so people will exit if they are more likely to exit if they're worried about where markets are going.
Yeah, some of these the grades that we have on XBI, it's a pretty sell and strong sell from analysts on this one.
Oh yeah, so even analysts have turned, because I was reading, I remember reading anyways a few months ago about watch XBI, that could be a leader, and that's what got my attention on it. I've always watched it, but yeah, so that's another disheartening thing to note. So let's get off this one. I did want to bring it up because I do want to not just ignore things that didn't quite work out. But let's see. What do we have next up? I think we have the Qs, right, Sean? Yeah, Qs.
I forgot I was muted. But yeah, Qs, fantastic, yeah. So we've got what looks like a double top forming, in my opinion.
Interesting.
Quite a hard rejection. Oh, hear me out. There's two different words here. But we've got a hard rejection off of this kind of 312 to 314 level, just literally Wednesday and Thursday together. And they're just two very ugly candles, but then followed by a very bullish candle, in my opinion. So we've dropped all the way down to that kind of 307 level, from what I can tell from the chart here. And we've pushed straight back up to 311 almost. Which, if we can get another couple of good candles and break through that 314 level, I think we're pushing towards 320 fairly quickly, in my opinion. But then, obviously, that would be an interesting resistance point, obviously, with all of the macro, etc. And we would be kind of pushing quite heavily above the moving averages, in my opinion. So maybe reversion to the mean eventually. But that's what I see in this chart. Kind of, I kept it simple, just a few lines on here. Two bearish candles followed by a bullish candle. But yeah, that's my thoughts. And if you have any thoughts on the QQQ here.
What makes you, if you can comment on that last bullish candle, what are the characteristics that make it bullish?
So you've got a bottoming tail, which is obviously it's dropped down and it's pushed up and it's finished right at the top. So it's not left any tail at the top, which indicates buyers coming late and obviously perhaps coming to the next candle, full of gusto, shall we say, and maybe push that one to a quite heavy green. They're the bullish characteristics I see in that candle. And obviously the retracement from the previous candle is over 50%, albeit slight, but it is over 50%, which normally means it's kind of pushing towards that bullish side as well.
Yeah, that's great stuff. Thanks, Sean. I totally agree. And those candles that close, we get buying all the way into the close. I like to look for that for momentum into the next day. It's interesting that it's right here at this resistance for that potential double top level.
It is scary, I think.
Yeah, I couldn't agree more. Especially with those two long wicks to the upside that didn't work out. Yeah. No, I think that's the right thing to highlight here. Kaye, you got anything else to add on this chart for the Qs?
Yeah. So I think on 310 we had this golden cross, 50-day crossing the 200-day. So that kind of indicated the bullish move up. Another interesting data point on this one is that we are above the September high, so which was 308. So we are way past that. On the fib level, I do think that 316, 315, 69, so I say 316 would be your resistance level. We did have two rejections at that level in the last couple trading days, those little, doji wicks over there.
Yeah.
And on the call side, on the 331 option side, you do have more bullish, so at 11,000 open interest at 320. and on the put side you have 9,000 at 305. But interestingly, if you do options for SPY or QQQ, you will notice that generally at each $5 level there are mostly more options open interest compared to these $1 or $2 levels. So these like 385, 390, 395, 400, these are more like a psychological level. So generally have more contracts open at those levels. But seems like a more bullish sign for now. Unless we get hit by another bad news, I think we probably hit 316 around that level, since there are more call options. That's what I'm looking at.
Good stuff. I love it. I noted that fib resistance is good information. I don't use.
I like that point on the Golden Cross as well.
Yeah. Yep. There's nothing but mixed signals. That's what I'm seeing.
As you say, the trend is your friend, but the problem is the trend changes every day.
Man, just give us a sign, right? Just give us a sign.
That'd be too easy, wouldn't it?
That would be right. Nobody would want to listen because they would just know what to do. Yeah. Yeah, it's just, it makes it all that much more fun, to be honest. But yeah, good stuff. All right. So next chart we're going to get into the stocks. And I've got a number of your charts lined up. So Palantir was the first one I had, Sean, and I have not looked at Palantir recently. What have you got? What do you see here?
So Palantir, I see basically a positive future. But now let me explain before I ruin it. Yeah, we can see that the three moving averages are kind of coming together, and the stock has stayed above it on the last 4 trading days. Now that to me is a good sign. Obviously we've got some mixed candles there, but the last one, similar to the QQQ, it's not a bullish candle as sorts, but it does leave a little bottoming tail, which means it has kind of bounced off the 20 and the 50 at the same sort of time. And I've drawn no kind of resistance and support lines. I just want to keep it simple this week for Palantir, and just creating perhaps a positive trend for the next, let's say weeks, months, short term really. But yeah, I'm hoping to move up to kind of 9, 10 level within the next couple of months. Generally, that's kind of how the moving averages I wanted to kind of perceive them this week. Do you have any thoughts on this one?
Yeah, that convergence of the moving averages for sure. And
I'd actually be looking for them to push through the 200, like the QQQ, to create that golden cross. But I don't know.
Well,
Yeah, that's.
go ahead, Kaye.
No, I was saying absolutely. That's exactly what I was looking at Palantir as well. Very close to the golden cross, and you can actually see it on the options contract. The options on both put and call, they're pretty much even out at 850, depending upon how you want to trade. So this could be a very good weekly trade, bi-weekly trade, rather than if you're an investor, you just want to buy Palantir for long term. Of course, you can do that at every level. But I think for weekly trades, this is a good opportunity because you could get a big bounce up in the coming days or weeks.
And by that, do you mean kind of swing trade is kind of commonly known as? Is that right?
Yeah, exactly.
Yeah.
I mean, on the options, at least on the folks in the US, they can do weekly options. I know, Sean, you cannot do options in the UK, but definitely, I think this is a good weekly income generation you can try on for the folks in the US. That's how I look Palantir at.
Sometimes I feel like I'm missing out with options.
That's how they're designed, to make you feel like you're missing out. They pull you in, Sean. Yeah, you know what I'm seeing here, just to add to the chart review, is it looks like a bullish flag. I mean, it's not the cleanest. It's a little bit messy, but you've got the huge move up. Now we've got this consolidation and this kind of downward flag forming. And then if you see that break to the upside, it should move right back up to the recent highs. And quite frankly, the way the pattern usually works, I shouldn't say usually, the way the pattern, plays out or is designed is that you would move higher. So, that's really an interesting setup and would be extremely positive. So I like that from a speculation, very speculative standpoint. I'll remind everybody, we are not financial advisors. This is not financial advice. Certainly hope you're enjoying the entertainment value and enjoying our thoughts, but don't want to mix anything up there. And so getting back to it, the bullish flag is what I'm seeing here, Sean. So I'm hopeful because I know you've got that long term look, but I'm sure you'd like a short term pop here.
Yeah, I think every talented investor would kind of want that. It's been a rough kind of couple of years, really, maybe slightly shorter than that. So it'd just be nice to have a bit of positive momentum for 6 months or so.
Yeah, let's see what happens. This week will be interesting. So you posted Neo, I noticed, and yeah, I like this chart here. And I was looking at my chart of Neo. I didn't post this week, but it feels like we've moved into like a new channel, a lower channel, and I also see a trend line you've got. So is that a blue circle?
Yes, it is a blue circle.
Yes.
You know me. I like my blue circles. That's my target point really for the next kind of week or so. I think
Okay.
maybe a couple of weeks. Just because we've kind of bounced off that 20-day moving average, as you can kind of see, although it's kind of a bit rough, but it is a fairly clean bounce I see there. But the trend line coming down is actually, it can be seen in the weekly, it can be seen in the monthly. That's a very large trend line. And we're just basically sitting on it. And very rarely have we sat on it for 2 or 3 more days. Obviously, I can't really put it all in this chart because you wouldn't be able to see it. But very rarely you sit on the trend line for 2 or 3 days. And I've just been simply looking for a move up to kind of 950, and then the following days after that, just to confirm that trend break, and perhaps move above 10, and then really change the trend, really change the momentum for the stock. And the company needs it as well, I think. A lot of neo investors are becoming a bit frustrated, a bit maybe uneasy, a bit impatient. Me personally, I'm not like that. A bit more patience, and I'm looking forward to Neo's future, and I'm just going to keep accumulating at these levels. And if it goes lower, I'll keep accumulating, of course. But yeah, hopefully we can break this trend line and look for a brighter future, move up to that blue line.
Yeah, so we're looking for a trend break. Yeah, I'm tracking, and I had 940, but your level is much more accurate around the 950 as far as that where it rejected, and I think that's the high end of the range, and $8 roughly is the low end. I wouldn't be surprised if we see it, kind of track back down to 8 as it, gets in that wedge.
Absolutely.
Yeah. But a break above that trend line would be something that would definitely get my interest for short term. And yeah, for the long term traders, dollar cost averaging here looks ideal if you're convicted with your investment in Neo. And I know you are, Sean. Absolutely.
Yeah, and I think stocks like this with such a high following, big kind of retail holding, etc. If we do break that trend line, the news is going to get out quickly, then people are going to get FOMO, and people will start jumping, and it could turn a bit nasty in a positive way. But obviously, it's not healthy really for the stock long term. But things could move quickly if it does perhaps happen. But again, like you said, it's not financial advice. It's just sometimes that happens with these types of stocks, these high following stocks. And if you'd agree with that, if you've seen your experience.
I do. Yep, that's how they move, and you'll see it in things I'll look at is the ATR, average true range. You can look at their I just lost it. That's too funny. But their implied volatility, excuse me, that's what I was trying to think of. So I'm sifting through charts here. But yeah, implied volatility will also do that. It give you a nice indicator of how much the stock is going to be moving. Kaye, what else do you look at? Do you have anything else you'd add to those?
I do MACD, RSI. I generally look at the moving averages. Sometimes I also look at the triple moving averages, like the 412 and 412 and 19, 18, I think. Yeah, that's the one. So those are some indicators. I think in respect to Neo now, because I'm generally a long-term investor in Neo, unlike I don't have that big of a position like Sean has, but I think a couple of levels that I had marked long time ago, and I'm still tracking those. I think mine is a little bit not as accurate as yours. So the level that I think they need to break is a 1026 from my perspective that I am actually eyeing. And then if this trend continues a downward trend, I think the support that I'm watching is 651. Again, these are more long term rather than short term. And then on the option side, pretty much you're looking at 8,000 open interest, 3,000 open interest, call versus put. So there's really not much you can decipher on a weekly basis. But this could also become your weekly options trading if you want to use that, along with Palantir and SoFi and a couple others, because these are smaller investment. I would say you would just need $900.
Right.
if you're using covered calls or cash secured puts. So that's
Yeah.
one way to look at it.
Yeah, Neo's been in my covered call portfolio, and I've sold somewhere around, I think I'm getting close to a dozen times I've sold calls while it's been in this range and moving lower, and just offsetting some of the risk. I actually wrote about it in the newsletter today that I posted today, and it was great because, you know, it didn't work out the way I wanted it to do in the short term, but the amount of loss I had was far less than what I would have had I not been offsetting by selling those calls. So, I'm glad you mentioned that strategy. So, Micron is a new one. We got ticker MU next. And, Sean, this one's got a nice defined range. I mean, you talk about traders enjoying a range. This is like a trader's dream right here. It's just,
it really is.
Bottom to top.
Well, I think we might be heading to that top bit again. Obviously, just around the corner. I think it's. I can't remember what day it was, but we got earnings this week at some point. Kaye, you might be able to chip in with that in a second. But
Yeah,
if we
it's on
can break
28th.
28th, that's Tuesday. So if we got earnings on Tuesday, so that could be a potential catalyst. Negative or positive, of course. Earnings are a bit like that. But generally, this is kind of a stock for long term in the semiconductor space, etc. But if we can break this kind of area consolidation really for since mid-June last year, if we can break this to the upside, then we're going to be entering that other period of consolidation, which you can see at the top left of the chart between 66 and 74, and ultimately be looking at going straight up to 74, and then potentially breaking that for the future of this stock. They've got a healthy balance sheet. I was looking at it earlier. I'm not a long-term investor in this stock. I'm not particularly interested in the stock in the long term either, generally. But just some things to look out for: the health of the stock if you are going to look at the long-term balance sheet. But yeah, just generally just breaking through this consolidation period, I think is good. It's above all three-moving averages, which I think is important. So this is what I want to point out. It's the perfect trading range, as you alluded to a minute ago, Nate. But this particular chart has two trading ranges, which I thought was quite interesting, and that's why I wanted to add it this week, just as an example of good trading ranges for all the listeners.
Yeah, I've seen a little bit of a pattern here where we were getting these stocks that had been on a downtrend flattening out a bit. That's what this looks like, right? We're flattening out, and yeah, targeting moving back up into that higher range I think that's a great strategy and something to look at. So yeah, I like what you presented here, and this was not on my radar. So thanks for bringing this forward, Sean. Okay, anything to add?
Yeah. So interestingly, so you have the earnings on 3/28. The expectation is the earning per share will be negative 85 cents. Revenue expecting about 3.7. Now, interestingly, I kind of took a little bit broader view on the chart. One thing what I started realizing that we had a double top on this one last August. You can call it double top, and it got rejected right after that from the 64 level mark. And then we ran up again to the 64.29. So if I do a fib level from the bottom to the top to 64, you will notice that this stock got rejected 1, 2, 3, 4, almost 5 times at the 64.29, so 64.65 range, I would say. That would be your resistance level. And if we are doing a weekly options on this one, we do see a lot of open interest at 61, 2000 open interest. We see at 64, 1.2, 65, 1.6. But on the put side, very similar numbers, 2.6 at 60 and 2.9 at 59. So again, this can also be used as your weekly options, but something to look at. I think 64, 65 is your real resistance level, since it has been rejected 5 times in the last, I would say, 8-9 months.
Yep,
that's adding on to that. It's added support 4 times, 3 times really back May, June last year, and then when it finally did break, it broke really aggressively. So you could see if it does break that 65 level, as you mentioned, it may break that aggressively in the same way and move straight up to 74 kind of area.
Exactly, and I think that will really depend on the earnings and the guidance. If since their earning EPS is still in negative, if the future outlook changes, I think you may be able to see that big break.
Yeah.
Yeah, to put that into perspective and just to kind of put a bow on this one, I like to see it break above that level, that 65 resistance, in that range. And then you'll usually see it retest it here. And then if you were to allow that to play out, you're reducing your risk when you're taking entry for upside because you've seen it break and retest. And you still, if it does move from that 64, 65 up to 74, that's a $9 move on a $65 stock. That is nothing to sneeze at. What is that? 12%, 13%? I'm not doing the math. I'm just thinking off the top of my head, but it's a double digit percentage move if I'm not mistaken.
Yeah, it certainly is.
And, so that's a nice move that you could get in a short amount of time and a stock that is showing you clear ranges. So I like it. I like that kind of setup for a trade. That's the kind of thing you want to look for. Good stuff, Sean, as always. And I noticed we listened last week. We had a request on ticker BABA for Baba, and I noticed you posted that. So let's look at that one next.
Yeah, so I mentioned it last week as well, that this Baba chart is just all over the place.
Yeah.
And you can kind of see that. This is the daily chart. So all these candles are daily candles. And if you've looked at any of the charts previously in our spaces, and obviously this one today, the daily candle seems a bit more solid. This one's just all over the place. It's up, down, up, down. And I don't know what to make of it. So what I've done is I've just drawn some levels here. So 80, 93, 102, and 120. These are the most defined levels that I can see. And this one, if I was going to trade it at all, which I do not plan to do at any point, it's trading between the levels, to be honest with you. But that's my kind of thoughts on the stock. Obviously, long-term Baba has been said as it could be a good shout and a good play, etc. It's not an interest for me personally. And if anyone doesn't know, it's basically the Amazon of China. Is that right? Am I correct in saying that?
Yeah, pretty much. Yeah.
Yeah. So generally looking at this chart, obviously playing the levels, and we can see the moving averages again all over the place. You've got that kind of 200 going straight through the middle, so maybe we can move towards that. But yeah, I don't know what your guys' thoughts are on this chart, but to me, it's just a bit chaotic.
Yeah, Kaye, I'll let you go first. I have some thoughts.
Okay, yeah. So I think couple things, right? First of all, of course, you have Alibaba is you can say that's the Amazon of China. The problem in this scenario with Baba is that a lot of retail investors were investing in Baba because Charlie Munger was investing in Baba. So, investors who follow super investors, they generally invest in those stocks. So that was one aspect. Second, of course, you always have China and US relationship issue. Every time the relationship goes south, stocks like these get impacted. Yeah. However, long term, we still see Baba as some as a stock that could go up a lot. So I do think that even from Wall Street standpoint, there is a strong buy. Interestingly, there is not a single sell on Baba. So there is a very strong buy on buying the stock because it really fell down to $58, and I think it is in the undervalued territory. So unless there is a really detrimental impact between US and China relationship, I think Baba would be one of the favorites. Having said that, I think 82 is a solid support level. It did bounce off from that.
Yep.
But honestly, there are so many gaps this candle has to fill. Even I have no clue what's going on with this chart. And I generally stay away from Chinese stocks in general, barring NEO, which I got into a long time ago.
Well, I got excited last week when this one was brought to our attention because I was like, I stopped looking at Baba because it had been falling off so bad. So I started taking a look at the chart. And Sean, you mentioned that the moving averages are all over the place. And whenever I see that, I actually try to find which one is making the most sense. And really for Baba, there's not really one that's working really well, except for the longer moving average. And so you like the 200 day, I like the 150. And when I look at the 150, it's not too far off from your 200 here. And effectively, we just cannot get over it. Every time we get over just a little bit for Baba, it just comes right back down. And that's where we're at right now. For the 150 day, we're right up against that moving average. And I wouldn't be surprised to see that being more resistance. And then also just like zooming back and trying to find a strong level, $90, 90 to 92, which you've got 93.43. So yeah, that makes sense. Actually, probably 90 to 93. is what I was looking at here. And that seems like either a make or break level. Once we get above or below, it moves quite a bit. We've seen it oscillate right around 90, and I think we're about to see it hit that level again. And I just don't have a lot of conviction or I don't see a lot to give me conviction, I should say, that it would be moving higher. The RSI has ticked up nicely though, in this last little bounce. So, I agree with you guys. There's nothing strong here, but it's very interesting. And I think it could be giving us strong signals if it makes a move one way or another here pretty quick. But it's a wait and see for me.
Yeah, I agree.
Yep.
I like that we're all in agreement. One of these days we're going to have vehement disagreement, and it is going to be awesome. But for now,
Well, we don't always agree, but generally we do.
This is true. Let's see. All right, so I've got two more from you, and they'll jump over the tickers I posted on. But you got Airbnb, which I am definitely interested in. What are your thoughts on Airbnb, Sean?
The Airbnb, this is basically from the beginning of the year. The orange line that you see at the front of the chart, or left side of the chart, should I say, is the first trading day of this year. And we're on the 2-hour candle chart. So that's why everything looks a bit smaller, a little bit more volatile, because obviously it's just a 2-hour chart. And what I can see here is a bit of a wedge, and we're holding that 200 moving average line. And if we can bounce off that and make a move above through the trend line, I'd be expecting a move back up to kind of 140 range personally. But generally, I just want to kind of applaud how the stock has done this year so far. Obviously, it's a game changer in the kind of retail space, real estate space. I'm sure we've all been to different Airbnbs.
Yeah.
I personally really enjoy them.
Absolutely.
You said a few weeks ago that the prices have gone up. I haven't seen that so much in England so far. But really, you can see the info box I put almost smack bang in the middle of the chart there, which is almost a 40% rise in this year alone. So, and you can see that's pretty good performance. And I think it could actually increase. I think it could go up from here. And if we did break that trend line down, we'd be looking to come back down to kind of 90, about 97, kind of 100 mark. Maybe 100 might be a bit more psychological level.
Mm-hmm.
So if we did break that trend line negatively, maybe down to that 100 level mark. I don't know if your thoughts are on this chart, or you've got some options data perhaps from Kaye.
Kaye, I'm going first because I'm excited about this chart. I love so many things about it.
Go for it.
Sean, I love that you zoomed in. Everybody talks about zooming out, and sometimes when you zoom in and use the 2-hour, or I like the 4-hour, you can get some really good, a more definition around patterns that are forming. And you pointed out that this is up almost 40% on the year, 37%, and that might scare people away, but I've learned quite a bit from one book in particular. I'll just mention it. It's called Trade Like a Stock Market Wizard by Mark Minervini. I don't get any kind of, there's no reason to plug that other than to tell you guys good information. I don't know Mark. He doesn't know me. But it's a great book because it pointed out, when you have stocks making big moves, and especially stocks that are newer in the market, introducing new ideas or new technology or whatever it is, like Airbnb is a whole new concept. It's been around a little bit, but it's still relatively new. When you get a breakout like this, sometimes that's institutional buying, and sometimes it's just the actual recognition of what this is going to be across the board by retail and institutional investors. But this could be an initial breakout. And there's a lot of examples in the past where you'll see in a short amount of time, 40, 50% move. You'll hear the talking head say, all right, well, it's overheated. I'm not getting in, only to see it move another 50, 100, 150% to the upside. And I'm not saying that's any stretch guaranteed. Nothing is, obviously, but it's just something to point out, right? Go back and take a look, if you like, at some of these big stocks that have broken out over the years, and you'll see they make these massive moves in a short amount of time, only to follow up with even bigger moves or the same size moves. And eventually, you run out of steam, some momentum, but it can be impressive to watch. And I think that, Airbnb has all the markings. So it's something I would watch. I'm not saying pile in by any stretch, but I'm saying something definitely worth watching.
It happens, yeah.
Yeah, so I'm excited. I'll calm down. Kaye, what were you going to say?
So I think from an option perspective, this is not the best option stock that you would want.
It's expensive,
to trade.
Right? It's expensive.
It's expensive. The premiums are relatively the amount you will pay to invest in this and then actually use for options. You won't get a good bang for your buck. There's not much open interest, like a few hundred. So this is definitely not something you would do for options. However, if you're going to invest in a long-term perspective, I think Airbnb, you should really follow the revenue. The revenue has been going up quarter over quarter, right? So that's one of the great signs. The revenue was up 40% year over year. That's amazing. The gross margin, the gross profit margin has gone up to 82%. I'm just throwing out some random numbers here, but the valuation of the company is improving from long-term investing. Couple things I also look at from a long-term perspective is how much institutional ownership is there. So you have about 42% in institutional ownership. You have about 30% on the retail side. So both institutions and retailers kind of love this stock. And the next I look at is the short interest on the company. It only has 5% short interest. Of course, it's relatively higher than some of the companies with 2 or 3%. Companies like Apple that, short interest, you never have any short interest on that. But relatively compared to stocks like more high beta stocks which have higher short interest, this is a 4.96. So I think overall for me, I think Airbnb is in my long-term portfolio, and I just continue to add, but something I will not touch options with this one. I don't get a good bang for my buck.
Yeah. This is if you're not familiar with the CanSlim method, go look that up. It's nothing I've invented or anything, but CanSlim I love, and this is one of those stocks where I would want to apply that to, where you go look at the earnings growth and the year over year, quarter over quarter. You look at revenue, you look at return on equity, and the numbers here for Airbnb are starting to go exactly the direction you want to see, and in good size. So yeah, I like it. I like it all the way around. All right. So DraftKings is up next, and you beat me too on this one. I like it, Sean. What got your eyes on DraftKings this week?
So this one was just another kind of stock that's done really well this year. Again, this is a 2-hour chart, and the orange line on the left side is the beginning of the year. Now we can see that this one's gone up a whopping 60%, which is 20% more than the last stock, Airbnb. So this should get you more excited, don't it? We'll see what your thoughts are in a second. Excuse me. What annoyed me about this chart, I did draw more lines. I don't like to overcomplicate things, but you can always see like a downward channel from, where's that, the 17th of February, which is basically the top candle on the chart, all the way to where we are now. It's kind of trading in the channel downwards, but it has respected that 200 moving average, and it's bounced off that fairly cleanly within the last 8 hours, 8 trading hours, should I say. So what I'd be looking to do is to break through that trend line, make a move upwards, maybe towards that 21 level again. And if we can break that 21, which we can see in the past has been a hard rejection point, if we can break through that, then we can see a good future, or at least near-term future for DraftKings. I think the stock generally, the company as well, and you'll be able to say more than me, obviously I'm not over there in the US, but generally they seem to be doing quite well. Obviously legalized gambling is happening more and more throughout the US. But they're my thoughts on this chart, potentially breaking this trend line, and if it does break down the 200, then we'll see. That's another week, I think, another week of analysis. Does this chart excite you, mate?
It does. I love DraftKings.
You spoke about it before on the spaces, haven't you?
Yeah, I enjoy the price action. Quite frankly, I mean, I'm with you with a long term perspective. And Kaye, I don't know about you, but where I'm at in the States, I mean, there's DraftKings commercials everywhere and all the time, especially now during basketball madness and everything. But yeah, I like the way this chart sets up. I am a little worried about the $20 level being resistance there, and it kind of trying to get back above after that huge earnings spike, and it just failing to do so, and now just drifting lower. That's a little concerning, but if it holds up here and we get some that trend line to break, then yeah, I really like the way that would look and where that could potentially go. So yeah, I like the chart overall. I would wait for that break though, to the upside before getting too excited. And then I would be cautious or taking profits as it got back near 20, just because of historically, how that's played out. What would you add, Kaye?
Just from the option standpoint, I think it definitely has the markings of something you can use that for a weekly. There are a lot more call options on the open interest side. So at 18, you have 1,000 plus. At 1850, you have almost 5,000 open interest, and then 3,000, 2,000 like that. Whereas on the put side, it's only in few hundred. So I think there's much more bullish momentum from the options standpoint, at least.
Yeah. Yeah. The premiums you can get selling calls, which is what I was doing with DraftKings for a minute there. They were really nice premiums, which made it obvious that it was going to be tough to hang on to the shares and not have them called away. But I think I was getting something like 1.5-2% for just 10 days of till the expiration, and $1 or $2 out of the money. So fair amount out of the money, and still collecting really nice premium. So yeah,
exactly. At an $1,800 today, you can get $45, which is almost 2.7 for 5 days of trading. That's amazing returns.
Yeah, that's really strong. All right, good stuff on DraftKings. Yeah, go ahead.
Just want to add in a bit about just general technical analysis that we're doing here.
Yeah.
Leave a comment in the space if you do like these 2-hour charts. The reason I do them, obviously this is the first week I've done them on this space, is because you mentioned earlier, Nate, when people use the 4-hour. The reason I like to use the 2 hours is it kind of breaks down that detail a bit more and just see a bit more price action, especially kind of me personally as a trader. It works quite nicely for me, the 2-hour chart. So if you do want to see more 2-hour charts, obviously it's okay for you too, of course. Leave a comment in the space, and I'd be lovely. I'd love to do some more 2-hour charts in the coming spaces, coming weeks, etc.
Yeah, let us know. I would like to know. I like to see them, and I like that you do the 2-hour because it shows a little bit more of the, the trading action and where the consolidation happens. Yeah, definitely let us know. That's the comment bubble in the bottom right there, and send us messages, a DM if you like. If we can't get to charts this week, we'll get to them next week. But yeah, I want to definitely take a look at what you guys want to see out there. So thanks for tuning in, and send those requests on over. We'll mark up the charts and we'll take a look.
Absolutely. So just a little example of that, we did Barber this week from a request last week. So we do them.
Yeah, absolutely. And that was a good one to look at, despite how crazy and how hard it is to analyze that one. It is a good one to look at. All right, good stuff. Well, I think we're going to jump over. We're going to flip the switch and go over to Tesla next. Is that what I've got posted? Yeah, Tesla. So, this chart here I kept kind of simple, as I tend to do, and noted I adjusted that line there, 204. It's a key level. We've had support there before and resistance. And we broke above a little bit to test that 150-day moving average. But this being the daily chart, that we keep rejecting there. And so that's the moving average I'm paying attention to. I'm worried that we're just going to see this move lower and eventually fill that gap, which is that rectangle box I've got lower. So I'm not too excited for upside unless we get a serious break with serious volume back above 204. And then I would look for it to, have to get above 220 initially, and that should give you a nice sign that we've got the upside momentum back in play. And then you can see, and I didn't draw it out, but there's a little bit of an upward momentum trend line you could draw going back from the start of the year. I mean, obviously Tesla's performed really well this year, after the big fall off, but, that's what I'm seeing. The support at the 50-day moving average, which would be where that trend line would draw, and is helping out. But we've got this resistance and the 150-day moving average resistance. It's that same mixed signals story here. And so for me, as far as a trade would be concerned, again, I would want it back above 204 first, and then a retest before looking for more upside towards 220. And to the downside, if you want to play that action, I would definitely look at, you could actually get in now given where the rejection took place. But if we get another rejection, if it moves back up and tests and pulls back, that would be a nice quick double test of the 150 here in a short order. And, I would see it moving lower. But I think, again, now we've already seen a rejection fairly strong. And if it breaks below that 20-day moving average, which is the yellow line sliding in there, the 50 is really close. So this stock moves in big, big moves, big swings. So it'd probably break right through it if we got enough momentum. That's enough talking for me. What do you see here, Sean?
Yeah, you mentioned the trend line if you drew it from the beginning of the year up to where we kind of are now. And you also mentioned the 150 moving average line. You could also draw a trend line in a similar sort of fashion, and it would create a wedge of sorts. And that could couple potentially with the 50-day moving average, which is the lighter blue line. So if we broke that, not only would we be breaking the 20, we'd be breaking the 50 and the trend line downwards, which for me, that's three indicators that I'm not so positive. So if we did break that to the lower side, then perhaps that would be quite a vicious move. But yeah, like you said, for the stock, if it does bounce, you'd be looking for it to bounce in the next few days.
Kaye, I know you've got stuff to say about Tesla.
Oh yeah, absolutely. So I think from an option perspective, I think apart from Apple, Tesla is one of the companies that pays you handsome premium for trading options. Now we do have a buy rating from analyst. Now if I draw a fib level on the chart, I do think that 208 is your resistance level for Tesla. But on the brighter side, is that the lithium prices have come down recently, and that could be seen as a momentum, a bullish momentum for the stock. And that's something to also track on, because Tesla is also a news-driven company. Depends on how you play it. However, the stock has run up 76% year to date, so you have to also keep into account how much more do we have in the tank until we see a little bit of downside. I know there were some people talking about 150 level, $150, the stock may fall, so keep that also in perspective. But on the options, quickly looking at it, you definitely see a lot more bullish action. 19,000 open interest at $200, whereas 9,000 open interest at $190. Considering the stock does move pretty violently, $10 is not a big move for Tesla. So keep that in account if you're trading Tesla.
Exactly right. $10 is 5 minutes in Tesla.
Exactly.
All right. Well, keeping with trying to look at the positive moves and more upside in this crazy market, I've got First Solar up next. FSLR is the ticker. I keep talking about this one because it is doing so well. This is one of those, again, that to go back to you've got big gains and you think, oh, this must cool off. Well, it moved from roughly 100 up to 130 and did cool off back to 118, but then took off again and got all the way back up to 160 before cooling off to 140, and then moved all the way up to 180, right? So this continuation with making higher highs and higher lows, it's not showing any signs of slowing down. And so what I like to look for is taking advantage when things come back down to test the prior high. And we got a nice bounce last week, and just as we wanted to see off of the 20-day moving average. And now I expect that to continue to hold. Like the 20 looks like it wants to hold. So hopefully that continues this week. We see more upside. And if we don't, we'll have a double top there, right? That's what I'm seeing. So I want to see that break back up above 220, get running, and not get a double top, because if we do see that, I think we come back down to that light blue 50-day moving average, and near. I'm not saying we'll not necessarily test 180, but that would be what I would be looking at. It could show some support though around that 197, right where it bounced off the 20-day. It looks like that could form your next shelf for a level to for consolidation and a level to bounce off of. So this is my favorite one. I think you guys have picked up on that. Anything else to add here, Sean?
Just that second to last candle is a very big topping tail, which to me looks like the sellers are coming in at that point, at that 220 level.
Yeah.
So I think that in the coming days, that's for sure. If we were to look up to that 220, perhaps another big rejection. If that was the case, then maybe that's a harder level to break through than we think.
Yep, that's exactly what I'm watching. Okay, I can't remember if we talked about options action for solar, but I think this was one where the spreads were pretty wide, but I might have that wrong.
No, you're right. The spreads are wide, and the open interest is not that big, but there is at the 220 level. So generally you have about 160, 200, 300 open interest. at 220 for next week, you have a good 3,000 plus open interest. And the bid ask is 185 233. So that's a pretty big margin between bid and ask. So if you are trading options, most likely it will be filled somewhere in the middle, and that's why we prefer with a more liquidity so that it can fill faster. Because as the price moves, the option prices moves pretty violently as well. So
right,
it's something I would not be in options and for such a low liquidity.
It's harder to trade the options for First Solar. I think I would recommend it only for more experienced options traders because of all the points you just made. But from a common stock standpoint, I mean, the great thing about it is it moves enough to where you can get really solid gains. There's 20, 30% gains back there or on that chart where, in just the common stock. So it's a nice short-term trade, but it also looks like it's setting up nicely for the long term. So it's a great chart. All right, so let's look at the chips again. So we've got NVDA. Kaye, you wanted me to pull up a chart on NVIDIA. What were you seeing?
Well, I think the couple questions, generally the analysts are asking now is how much upside do we really have with NVIDIA? Because I believe since it has run up 87%, and with the whole AI hype, NVIDIA is of course positioned very well with that hype, right? It definitely has gained a lot of momentum. So question is that, and even on the options side, we are seeing a lot more bullish calls at 5,000, 6,000 open interest at these, 270, 275 levels. But, if you are not investing, if you're not investing for a long term, question is how much do you really have upside? For short term, I'm really debating about taking some profits off the table, considering I'm in the 70, 80% range of profits. But this is a very tricky situation. It can also rip up, considering AI hype is there, and a lot of companies, and I know that you have a chart for ANET, which we can talk a little bit later. But that's what I'm seeing here, honestly. It's a very, I'm split between whether I should take profits off or should I continue investing and trading options in this one.
You've got some nice gains already. It's good you're taking some of that off the table. You've got to do that, especially in this volatile of a market, right? You take your profits when you can get them. And if you want to roll to higher upside, use a portion of those profits. That's how I roll. That's how I go about it, how I roll. And, like literally how I roll. But yeah, I recommend that, when you have a market like 2020, when things are just ripping to the upside and not slowing down whatsoever, it's a little easier to let your winners run and you can reap the rewards, but that's not the market we're in right now. We're trading a sideways market at best.
Exactly. And for folks who will say as a counter argument that it pays dividend, the dividend yield is practically nothing for NVIDIA. So even though it pays dividend, it's really not a dividend. You cannot rely on dividend. You really need a lot of stocks to really see some meaningful dividends. But yeah, definitely I think profit taking is important. I think nobody became poorer by taking profit.
That's right. That is right. 100%. In the chart, looking at the chart, we've got a nice rounding. I had commented a few weeks back that it looked like a reverse head and shoulders pattern, and it broke out from that. And now, it's pretty extended here. That's a pretty steep run, but the 20-day is holding. The 20-day moving average is holding the yellow line there. And so now we're testing that 260. I've got 267.75 here as prior resistance and current support. And if it can hold here, that's super promising. I don't fully expect it. But like you said, that AI news could really get this stock moving. And, I would consider that speculation, right? That's what we're doing. We're talking about speculating in that respect. So I would be allocating massive percentages, but I think it's a fair point to speculate. And NVIDIA is clearly a leader in the space, and the chart is very constructive. And so we're talking charts here. If we can hold this level and move higher, next level up I've got is, oh man, is that 286? Yeah, 286.50. I need to get better glasses apparently. And so yeah, 286.50, and then you're talking the 300s and getting the 3 handle again. And that's a tall order given how much we've already run for the year and going all the way back to October of last year.
Exactly.
Yeah.
I think just a note on there, that 286 level last time we touched that. It sold off about, I don't know what percentage that is, about 20%, maybe slightly more, in the space of like 2.5 weeks.
Yeah, it did.
So that's clearly a good selling point, isn't it? So if that does happen, then perhaps a vicious move down. Not obviously past performance isn't an indicator for future, but to me that's a lot of selling pressure at that point.
You know, I worked at a mutual fund for a while, and that phrase is burned into my head. I said that so many times. Past performance is not an indication of future, for future returns. And, that's right. That is right. We are using these charts to help with our probabilities. And we'll see what happens. But, NVIDIA it's the leader. And, I've said this before though, I like what it's doing, but my eyes in the chip space has shifted over to, ON Semiconductor, ticker ON. And similar to the First Solar chart, it's bottom left, upper right. It's a really nice looking chart, retesting, prior resistance and forming new support levels and then breaking through those. And actually, Sean, what I'm seeing here now, I'm looking at it, and after seeing your Micron chart, oh, did I lose you guys?
Technical difficulties back together.
Hey, I'm back. Hey, dang! I was saying so much good stuff, you guys. I was on a riff.
So I'll just continue my thoughts on this chart while we're here, while he gets back together. And so we're steadily moving up to that 87 mark, bounce off the 50, bounce off the 20, that kind of area. And we've got that previous resistance point around that $77 mark. So bounce off. It's three indicators suggesting that we might bounce off of that level and perhaps move up to that 87. Obviously, the stock has consolidated within that kind of 60 to 77 mark for the last, I can't think of the chart, probably since August last year. Obviously, the recent breakout might indicate maybe positive performance for the near future on. I'm looking forward to hearing what Nate's got to say about this stock. I don't know if you have any further thoughts on this, Kaye, by looking at this chart.
I think we do see negative sentiment, right? Medium-term bearish, because the 50-day moving average has crossed the price here. Is what I'm seeing. I think so.
It's coming in right at
maybe slightly just,
yeah.
Right. Yeah, on the option side again, pretty wide spread. Bid and ask, not much open interest.
You guys got me again now?
Yeah, we can hear you, Nate. Yeah.
Oh, fantastic! Sorry about that. So. Yeah, Sean, that was great. Your read on the chart was right in line with where I was going. But man, what I was saying on this is, and I don't know where I cut off, so I'll just quickly recap. This is similar to First Solar, bottom left, upper right, right? A really nice chart. Prior resistance is now becoming support on multiple levels, and then we retest that support and move higher. And so that's what we're seeing here, I think, at 76.75. And, looking at Micron, and that was the other piece that I was, really excited to see, just kind of right now form in front of my eyes after looking at that Micron chart where you showed there was a range and then a higher range that we moved up, that we were in previously and could target moving forward to again. Looks like we've done that here. We had a range we were in, we've broken out of it. Now we're back above that, and now 76.75 is the lower end, with 87 being the upper end. I could see us trade between those levels. And I would like to see, as Kaye was pointing out, the 50-day, the light blue, holding here. We did cross below it a bit, but we're holding it. We could hold it and move higher next week. So, that's where I'm at as far as on semiconductors. It's leading a nice chart here. So I'm looking for more. Let's see here. Got to get folks back in. I think I lost Sean. We get you back, Sean?
Get me back. Yeah, some reason I just couldn't hear you at all.
Well, I'm not saying that a third time, so we're going to move on.
No, I heard it. Yeah.
I'm kidding. Yeah, I'm kidding. All right, let's see here. So So next up is ticker ANET. So this is Arista Networks. And this is another one that I brought forward previously, which was great because I don't think that you or Kaye, I think it was, at least you had said that you had not really come across this one. And this is a weekly chart. So I noted that at the top center here so I don't forget. And what you see is a really nice trend to the upside. We've retested this green trend line that I put in here. I know it's green because my wife told me it's green, and that is the color I've gone with. And so yeah, now you can see it bounces, and when it's moved higher, it's made higher highs. So I really like to see that. Now this is really extended. I mean, you've got effectively 2 straight weeks of really big moves up, break into new highs, and all great on positive earnings news. And so really great to see for Arista. And if you're feeling like you might have missed out on getting in on this for a long-term investment, I think we might get a pullback as this will kind of rest. Typically, that's what you see when you see a big move across 2 weeks like this. I mean, you can see it historically. You just go back to October of last year, huge move up and a continuation higher, only to kind of pull all the way back to where it started, and then continue higher. So, if you're looking to get in here, it's an interesting company, and maybe in one of these weeks we could do a deep dive on just a couple of our top companies on what they do, Sean and Kaye, and make a space on that, because I think it'd be interesting for these longer term investments that we're interested in, like Neo and Arista.
I think so. Yeah, that would be a good idea.
But it should be separate space in general.
Yeah.
Yeah, go ahead.
Yeah, separate space. You're saying, yeah, Sean?
Yeah, I think so.
Yeah, what were you gonna say, Kaye?
No, I think for folks who are looking into exposure into more AI, and I think AI is going to become a major part of the economy, just like you have healthcare and tech. I think this is one of the stocks that you should definitely keep an eye on, because it's not something that retail investors generally talk about. Most of these companies like GitLab or Arista Networks is mostly institutional owned companies. So it's not on our radar for retail investors. I would be careful opening a position. If you already have a position and you're adding it, that's a different strategy. But if you're opening a position, again, not a financial advice, but you have to be careful. The stock has run up a lot, and mostly because of the AI hype that has happened over the last couple months because of the launch of ChatGPT. And Arista Networks also came out. A lot of analysts started covering back. Goldman Sachs actually started covering all these not semiconductor, but AI-related stocks, networking stocks. And there are a couple others like Juniper Networks, F5, Cisco. They are the peers of Arista Networks. So keep those also in your radar. But some things I would definitely hold off from opening a new position here. And that's what I'm doing.
Yeah, it's just really got extended here. I don't blame you, Kaye. And I do like it for the long term. And everybody's got their own strategy for your own, what your own position is. And we're not advisors, as you mentioned, but definitely an interesting chart and just really nice movement for ANET. That is the last chart, but I wanted to comment on one other ticker here because I mentioned it to both of you and I didn't get a chance to post it here, but it's in my newsletter. There's a link in the bio. I'm writing about my covered call portfolio, and every week I talk about what I've traded the prior week and what I'm looking to trade the upcoming week for the portfolio. And this week I'm looking at potentially taking a position in Luminar Technologies, LAZR, strictly short-term trade. But there's some upside potential and there's a downtrend break. So that's what I'm looking at. If you're interested, you can take a read and, like I mentioned in my Substack, the link is in the bio, and maybe we'll take a look at this one next week and see how it played out. So that's ticker LAZR. I just want to mention that. But hey, guys, this has been great yet again. I mean, I really enjoy it every week. Like I say, every week, cause I do. And, I hope you guys have a great rest of your day. Sean, you're wrapping up your day, right? Anything else going on?
No, it's 20 past 8 here now, so I'll do a bit of editing, a bit of extra work, and then I'll ship off to bed.
Is the sun down finally?
It is, yeah. I went down about half an hour ago, which is actually rather pleasant, must admit.
And thanks again for all of your great analysis and following up on Baba this week. That was great. And Kaye, appreciate you being back. And if you have any croissants you don't want, just send them to Sean or I. We'll take them.
Sounds good, Sean.
That's great. Croissant.
All right, guys. We'll let's chat about getting another space put together, deep diving on a couple of stocks. I think that would be great. And we'll reconvene again next week. And best of luck trading to you and to all the traders out there. Trade safe and trade wisely. Thanks for tuning in.
Take care, everyone. Bye.
Take care. Bye bye.